Good morning traders, Carlo from Blueberry with the week ahead. Let's quickly summarise where we're at and the current state of play. So the ongoing conflict between the US and Iran will likely set the pace for global markets this week. There's been reports, of course, of progress, the deal that includes restoring trade through the Strait of Hormuz. And that's what we have seen last week, and that is what has impacted markets. So we have seen equity markets strengthen. You can see here in front of me, this is a chart of the NASDAQ on the dailies. Since the beginning of April, it has been almost straight up. In fact, prices have stayed above the 20-day exponential moving average in yellow, and they've continued to soar higher. And where we are today, US equity market indices, particularly the NASDAQ, the Dow Jones, S&P, are very close to record highs. With progress in the Middle East, we've also seen the oil price come off its highs. It remains very choppy, but still, we're currently on its lows around $91.50 US a barrel for West Texas. Gold is straddling that 4,500 mark. Yes, it's been volatile, it's been below that, but it comes back quite strongly. So other than the strong move in US equity markets, we've also seen the US dollar lose some of its safe haven status with the improvement of positive news out of the US and Iran. And you can see here some of the key major pairs. The Australian dollar has gained ground against the US dollar. So is a Kiwi, the euro up around 116.50, the pound sterling 134.50, and so on. So will these trends continue for the week, being lower US dollars against a majority of currencies, including commodities? We look at the commodities as well. We've got gold straddling that 4,500 level. Yes, it has been volatile, but it tends to stick around the 4,500 mark at the moment. Silver, $75. The oil prices have come off their highs. We're currently just above $90 US a barrel for West Texas crude and a little bit higher for Brent crude. Which central banks may be on the move? Or the Reserve Bank of New Zealand, first of all. There's an 80% chance factored in by market participants for a rate increase at its next meeting. The European Central Bank, there's a 90% chance of a rate hike at its next meeting. And the Bank of Japan, a 70% chance factored in by market participants at its next rate meeting. Therefore, let's keep an eye on those economic inputs and data that may impact New Zealand, Europe, and Japan in the coming weeks. Let's move on to the week ahead. We can see here, as mentioned, US-Iranian conflict and ceasefire will be crucial on how it impacts markets in general, and therefore risk on or risk off. Currently, we're in a risk on scenario, which is benefiting high beta currencies and also equity markets. Not so much cryptocurrencies. They've been a bit of a laggard all month, but that might change. On Monday, we have a lot of PMI data coming out, so you'll see the full suite. Economists forecasting. Let's now take a look at some key data this week. There is a lot of secondary data coming out this week. Let's focus on the main data inputs. First of all, on Monday, we see a series of PMI data to be released across China, Germany, UK, and the United States. These forecasts provided by Bloomberg, expecting the Caixin manufacturing PMI data to drop to 51.4, still above that 50 expansion level. The German manufacturing PMI data to stay below the 50 level. UK and US PMIs to be quite robust, around 53 and 55 respectively. On Wednesday, we have the Australian GDP data. Now, you may recall last week that inflation monthly data did drop from 4.4 to 4.2%. GDP is to remain steady, around 2.7% annualised. Also on Wednesday, we do have the ADP non-farm employment change in the United States. Markets may not be focusing too much on this because on Friday we do have the US non-farm payrolls data. It is the main event for the week. Market expectations are centred around 95,000 new jobs, similar to the previous month new jobs. Unemployment rate to stay around 4.3%. Now, this economic data input will likely impact the Federal Reserve's future intentions on monetary policy, so impact equity markets, commodity markets, currencies, you name it. And don't forget that on Friday night, we also have the Canadian employment data, a bit of a bounce of plus 10,000 new jobs, compared to previous months, minus 17,000 new jobs. As you may recall, the Canadian economy is nowhere near as strong as the US economy, with cash rates 2.25% versus the cash rate in the United States of 3.5% to 3.75%. So economic data across Canada and the US will likely impact the dollar CAD rate as well. So a busy week for the first week of June. Our focus remains on the US-Iranian conflict, also the big event US non-farm payrolls, soft USD and strong US equity markets. Good luck with your trading, and I'll see you in the next video.